Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 7th of June, starting on with the FTSE 100, where it's managed to bounce above the 200-day line. That's around 75.20, and between that and the 50-day line, 77.10, waiting for a break either way, I suppose, but ideally we're half full rather than half empty above the 200-day moving average. If you're cautious, probably want to see an end-of-day close through 76.50 as a momentum trigger. On the downside, an end-of-day close back below the 200-day line risks a test of that uptrend line from back in October, 74.75, and then obviously the risk of a test down to 72, 7300. But at the moment, doesn't look like we're going to have that, but obviously stranger things have happened. On to the DAX, which has been in better shape than the FTSE for most of the recent past. Here it's well above its 50-day moving average. It's just toying with the top of that gap that we had on Friday, the gap higher around 15,900. Support here around 15,700 at the floor of that rising trend channel from the autumn. And supposed to be safe, we're looking for a proper end-of-day close through 16,100 to give us a move through the top of the channel, towards the top of the channel at 17,000, which may be a target for the end of next month if we stay above 15,700. RSI just clinging on to the neutral 50 level itself. On to the Dow, where the excitement really would always be if we could get through the main resistance line there from last year, April, around the 34,000 level. And here we have the market bouncing off the rising 50-day line, which is probably the best thing about this chart at the moment. Want to see that line there broken at 34,000. If we can do that after umpteen attempts, then we would be looking at a potential 37,000 target over the course of the summer. RSI in the right place, around 55, which is useful. In terms of the downside, we're not expecting, even if there is a lot of range trading, we're not expecting anything lower than 32,700 over the near term. And as I said, the way that 50-day line is rising quite sharply is quite encouraging. On to Bitcoin and the crypto area battered by the latest attempts by the authorities to discredit them, one could say, but a nice bounce there over the last 24 hours from below 26,000. We had the old 26,700 March support area, and we've got back above that. Still looking for a break of that April resistance line in the 50-day moving average around 27,700, which would then give us, or potentially give us, a move up towards the 34 or 35,000 area over the course of the summer, SEC, etc. Notwithstanding, even a move back to 30,000 could be achieved by the end of the month if we don't make any lows below the 25,000 area. Below 25,000, it's the 200-day moving average and the floor of that rising trend channel from last summer, around 23,300. On to the stocks, and starting off with Drumz, which I think is already, or soon to be, imminently called Acuity. Here, beautiful bull flag either side of the rising 200-day moving average. We've got a rising 50-day line as well. That suggests that we're going into a golden cross. We already had an unfilled gap to the upside, bear trap gap reversal off the low, so everything positive there, as well as the bullish divergence line, so lower lows and higher RSI trace. So going great guns at the moment, above the 200-day line at 7.9 pence. We are justified in looking for 12 or 13 pence at the top of that broadening triangle. In fact, maybe had been a bit too modest there, and the triangle top could actually be as high as 14 pence to be hit by the end of next month. At this stage, while we're above 7 pence, we are quite confident that 13 or 14 pence will materialize over the near term. On to Eurasia, which I think maybe one or two people may have thrown in the towel after all the experiences they've had here. But this stock now looking rather better than it has done for many months, in the sense that all the previous pushes through the 50-day line have been sold off quite quickly. But here we're holding above that 50-day line around 3.1 pence, and above that looking for as much as 4.5 pence by the end of the next month. Obviously, that would be quite a coup for the bulls, given the trajectory of the shares over recent months. But this does look encouraging, as I said, at least while we're above 3 pence. If that is broken, then obviously the picture changes. Moving along to another stock which looks like it might revive itself. First Tin. I know it doesn't get much coverage, so that's why I'm looking at it. But here we've got a rising trend channel off the lows, and nice bounce there and push through the 50-day moving average around 7.25 pence. Above that, we're looking for 9.5 pence as soon as the end of this month. Obviously, that would retest the main resistance, the post-March resistance that we've had. But that's an encouraging consolidation either side of the 50-day line, and then pushing higher on that particular price action. Moving on to a stock which is looking good in terms of the trend that it's had over the recent past. GreenX Metals, and here you can see that we've got a rising trend channel which has been in place since October. You see that the shares can see that. We've got a rising 50-day moving average as well. Just waiting for a definitive break of that resistance line there from the start of the year. You could say that we're just about doing that at the moment. So above 42 pence, that line is broken, and we could be heading up towards the top of a rising trend channel from October, as high as 70 pence by the end of next month. The reason for being relatively, suggesting a relatively quick move is that we've been consolidating for so long since the start of the year, so one would have thought within the next month or two, there'll be a decent breakout for this stock. Onto a stock which is certainly not a hero at the moment. Rug pulled quite definitively with IOG today. Some people obviously thinking of bottom fishing. What's interesting here is that the shares did actually behave themselves until today. So we had progress within a rising trend channel from February, and we hit the top of that channel a few times. But the top of that gap there did for the stock on a technical basis. Just managed to approach it, not quite fill it, and then come back. And obviously today we've had the gap down. What will be interesting now is whether we can get an end-of-day close back above 4 pence. That was the old support. That's currently resistance for the shares, 4.05, the high of the day. So an end-of-day close above 4 pence really would be the sort of a worthy technical trigger for anyone deciding to catch this particular falling knife. Moving along to a stock which is in better shape, Oxford Cannabinoid, and here it looks as though we have the shares ready for a new leg to the upside. Rising trend channel there from January, and a bit of jiggery-pokery either side of the penny level. But while there's no end-of-day close back below a penny, one would be looking for the shares to resume that uptrend and maybe progress towards the 2023 resistance around 1.5 pence by the end of next month. Ultimate target here maybe by the end of the summer as high as 2 pence, but obviously one wouldn't want to jump the gun. The other things to wait on, if you were cautious, would be the RSI to get back above neutral 50. It's 43 at the moment. Or if you are fussy, wait for an end-of-day close through the 50-day line, currently at 1.2 pence as a momentum trigger for a move to 1.5 and then 2 pence. On to one of the stars of the day, one of the few stars, I think, of the day, Ondo, where we've had the shares. We're looking for the shares to push towards 28 pence initially. We've got up to 25, I think, yesterday, but above 20. Still looking for 28, and then as a best case scenario, up to 40 maybe by the end of next month, depending on the news flow. Obviously, today it has been rather good. Moving along to Southern Energy, which has been one of those more obscure recovery situations. Here we've got the shares managing to hit our target twice. So the first time at 25 was last month, and breaking 25 now this month above the floor of the gap that shares have left at 24.75. We're looking for 40 pence as soon as the end of next month. The 50-day line now rising, and that tends to be a good momentum trigger for such situations. So 40 pence hopefully by the end of next month, and that would be also a meeting with the 200-day moving average just around the 40 area as well. Just 3 stocks to go now. First one is Supply Me Capital, which a bit like Eurasia has gone up and actually staying up as much as it can, I suppose. Here we had that initial spike there up towards 0.12. That's now become new support. So ideally the shares remain above 0.12 and then head up to a potential move as high as 0.18 or 0.19. by the end of next month. We've got the 50 and 200-day moving averages both crossing. Not quite sure whether that's a golden cross, but not a bad cross anyway. As I said, above 0.12, the situation there looking relatively firm. On to strategic minerals, which I haven't looked at for a while. Here it looks as though we've got the glimmers of a rebound, sort of multiple support points there around 0.12 pence, bouncing off the floor of that broadening triangle there from this time last year, and above 0.15 we're looking for the shares to head as high as 0.4 pence by the end of next month. So it's a punchy call, but let's see if Strategic can do it. If you are cautious, you wait for an end of day close above the top of that gap there, or that old support there from April around 0.22. Finishing off with Zenith Energy, which is potentially looking to win $48 million. Shares are edging up, still need to break that 50-day moving average around 0.48. Above the 50-day line, then we've got the chance of a move towards 0.7 or 0.8 at the top of that falling trend channel from this time last year. That's it for me today. More updates tomorrow.